Hello traders and welcome to another video review. Today is Thursday, May 26, 2022. Let's start with the Forex calendar. As you can see, the London session is virtually non-existent. There is no interesting data scheduled for release. However, there's plenty of data scheduled for release during the during the New York session, and many of them might be a market mover. So what do we have here? We have retail sales from Canada, scheduled for release at 2:30. Market participants expect an increase from 0.1% to 1.4%. Unemployment claims and continuing claims are scheduled for release at 2:30 as well. Those data are from the US, and those data are of course from the labor market. GDP and GDP price index, so the gross domestic product of the United States, it's scheduled for release 2:30 as well. And at the end of the day, we got pending home sales at 4 p.m. and natural gas shortage change at 4:30. So some data are present during the New York session. Maybe some of them will be a market movers. However, what we should do when we have the data from the US, we should start with the US dollar index. The daily time frame chart of the US dollar index is showing us a decline below the level of 102.35. Now this level will become technical resistance, so we got this here. And of course the decline is already 3.25%, minus 3.25%, so it's the biggest decline during the up move. So this is definitely different cycle started after the bearish divergence. The momentum is already below the level of 50, the neutral level on the RSI, and it looks like we want to go lower. Where we are going with the US dollar index, we are going first towards the level of 100.89, which is the technical support, and then we will get minus 3.95% decline. However, if we are back inside the ascending channel, we might test the technical support from the beginning of the March, located at 99.38, and that decline is minus 3.35%, and it's a quite substantial decline in that situation. However, if we zoom out, we can clearly see that from the beginning of the channel, this kind of a decline is something that can still make the uptrend work, and we can still travel back to the upside here inside of the ascending channel. So hefty correction is needed on the US dollar index, and then we can of course continue to the upside. US dollar index is going down. What is the S&P 500 doing then? The S&P 500 market, as you can see, is not really moving that much. Recent few days, last week and this week, had made a bottom for the wave 5. So this bottom here will be definitely noted, 3,811. The bottom for the wave 5, bottom for the wave 3, 3,857. And if you take a notice, then you will see long shadows from the made after the bullish action. So lower shadows are longer, which means the market is being bought back up after any kind of a decline. However, bulls are making the effort to push the prices higher, but there is no result. Take a look at this price action here. There is no result from the effort yet. If there is no result from the effort, bears might get either scared, or they may just throw a towel, get bored, or whatever. And then of course the bears will push the prices lower. The target is 127 extension, Fibonacci extension of the wave C. So this is the 3,735 level. And if we hit this level, another Fibonacci target is hit, so the market is highly technical. On the other side, if bulls are trying to push the prices higher, if bulls are trying to rally, to bounce, to make a short squeeze, they have to break above 4,137. This is the level of a breakout. Otherwise, we can still travel way lower on the S&P 500. So, US dollar index going down, S&P 500 doing virtually nothing. What is the euro dollar doing then? Well, the euro dollar, after this nice rally, bounce, or whatever you want to call it, back inside the channel, made a bearish engulfing pattern around the level of 1.0760. This technical resistance has not been hit, but the technical support at 1.0643 has been already tested. However, any breakout lower would likely get the situation worse, because then the next technical support is around 1.0472, and this level is out of the channel. Again, we might see acceleration to the downside, especially when the RSI turns down and enter the negative territory. So the US dollar, very interesting situation, locked between two levels: technical support, technical resistance. Which one will be taken out first? That will determine the next move on the euro to the dollar. Let's take a look at another market, which is euro to the Japanese yen. The situation on the euro to the Japanese yen has been completed in form of the ABC. One situation has been completed. The second situation, as you can see here, is again the A, B, and C movement to the upside. However, this movement is definitely below the trend line. So as you can see here, this is technical market. This is technical market that is respecting the trend line. So we can now remove the or maybe we will just switch the cycles, right? So this is the higher cycle. It looks like the ABC to the downside in form of the wave A had been done. ABC to the upside B might be done. It's not definitely done, but might be done. So we should expect down move towards 131.59 or even 128.27. If we take a look on this situation from a bigger perspective, we can see that this is very probable move, and if that happened, we can remove this trend line. If that happened, then even the lows of the beginning of the March 124.40 is in danger. So please keep an eye on the euro to the Japanese yen. Let me just find out how much we retrace already, how much the market retraced from the bottom to the top. We retraced already around 38%. Well, to be honest, it's not 38%, and it's neither 38% nor 50%. Okay, so we didn't retrace any of the important. We didn't hit any of the important level yet. This is way above 50%. So maybe this would be a good target for the wave C. 50% technical support, very nice. So that might be some sort of another decline. If this wave is made in 3 ways, this wave is made in 3 ways, that might be 5-wave decline in wave C on the US dollar to Japanese yen. And last but not least, let's take a look at the spot gold market. As you can see, the gold market is moving as anticipated. After the ABC correction has been done, we need to break above 1,900 in order to rally higher, and of course then break out of the channel. However, the recent bearish engulfing pattern, which was made around the level of 1,860.70, the high was 1,870, is telling us that the bears are again in charge, because we didn't break towards the positive market territory. The neutral level holds the bullish rally, and now we are coming off the levels of 1,870, and negative sentiment prevails. So we might see another move to the downside very soon on the gold market. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.